we're sitting down with the ex-president of the Toronto Stock Exchange, Ungad Chadda. Like, talk to me about where it was when you started and then how that kind of grew.
I went from a $30,000 salary at a university. As soon as you get your letters, the phone calls just start coming in. Those days,
Really?
the market was that strong.
Would you ever take a job just for money?
At UIG, it's all about scale and growth.
When did you end up making this first 100 grand a year?
I started making first 100 grand a year.
Welcome to another episode of 100 Ways to Make 100K. And on this episode, we're sitting down with the ex-president of the Toronto Stock Exchange. Now, currently, he's the CEO of something called Urban Infrastructure Group. We'll dive into that in a couple moments. And he used to be an accountant. So in this story, we're going to be meeting Ungad Chadda, the one and only. And he's going to be telling us a little bit about his story. So Ungad, thank you so much for being on the show.
Javon, my pleasure. Thanks.
So I didn't even know that somebody could be the president of a stock exchange.
Neither did I.
But you were him.
That's right.
And I'm really curious about why they thought you were, a good fit for this. But let's get into here's what I want to do. Yeah. Let's give everybody kind of like a quick snapshot of where we are today. And then we'll go back and we'll uncover the story and dive into some of the lessons learned. Sound like a deal?
Sounds good.
So talk to me a little bit about Urban Infrastructure Group and what it means right now to be CEO of that.
Sure. Well, Urban Infrastructure Group is a publicly listed company on the TSX Venture Exchange. Mm-hmm. And we do basements for big new developments. So you go out to the suburbs, whether it's east, west, north, we do 1,000 basements a year where we're doing all your foundation, anything concrete that you can stand on. Yeah. So that's the business we're in. It's not very common to have something on the stock exchange. Like there's REITs and there's other things you can invest in, yeah, but actually into the skilled trades that we have on our team. Mm-hmm. So yeah, it's pretty exciting, and we're enjoying it.
Now, was it public when you got involved, or were you part of the team that took it public?
I was part of the team. I got introduced to Gary and Christina, who are the founders.
Shout out Gary, shout out Christina.
Yes, shout out, thank you. And yeah, a couple of years back, and they had a vision that they wanted to scale the business using public markets and also acquire a whole bunch of other similar businesses and just get big. And so, yeah, there was an introduction through a common buddy of mine, Jay, okay, who connected us. And from there, it took a while, but we got there. We got listed.
Well, now you got a quick snapshot of what Ungad is up to today, other than hanging out with us, obviously. But now we want to dive into the story of who is Ungad. So where were you born? Don't worry, Unk. We don't have to worry about when. That's what the young kids are calling me now. They call me Unk. Oh, apparently, yeah.
Well, I have a good friend who used to call me Unk just because my name's Ungad, and for short, somehow it became that. So I got confused. I go, "Did you talk to Caroline? What the hell?"
Yeah, man. So tell us a little bit about you, man. What are some of the things about the previous life that Ungad lived that maybe highlight some interesting nuances that let us know the person that we're sitting in front of today?
Sure. Well, born and raised in GTA, Etobicoke. Grew up in Erin Mills, west end of Mississauga. Go Raiders, Arundel High. And then MACHE, Hamilton. Went to school there. Did commerce there, and then articled. I guess that's the term. I don't even know if that's the term at EY. Okay. It used to be called Ernst and Young. So yeah, I ended up going the CA route. Did that for the obligatory sort of 4-ish years. Mm-hmm. And then answered a call one day from a headhunter, and the rest is history in terms of where I went from there.
So why did you want to become an accountant?
I didn't. So next question. No, I'm kidding. I wouldn't say it was a huge passion. It was sort of a means to an end. I always looked at it, and on campus back in '93, I guess, we're looking around. Who's hiring, right? Banks, consumer packaged goods like Nestle and Kraft. Yeah. My grades weren't good enough for law school.
You graduated in '93?
No, I graduated in '94. Don't age me now.
Okay.
And so,
sorry.
So it was really that year was. There were a lot of CA firms on campus. Okay. A lot of hiring.
Doing like campus recruitment.
Yeah. So they would come in and, you'd look at the board and I actually just studied what that designation was. And at the time, they were, branding the CA as more of a business degree or designation, so that you weren't going to be pigeonholed into like bookkeeping, accounting, and tax and whatever. So I trusted them and went through the process, and the rest is history.
Wow. So it's cool to think that the CA, CMA, CGA all kind of merged into the CPA a couple of years ago. But what was the landscape of accounting like before? Was it was it CA for forever? Like, how did it?
Yeah.
I know they did that merge in 2014, but what was the landscape of accounting back in the 90s? For context, I was born in 93.
Yeah.
Oh,
Okay.
damn, I just dated
Good.
myself.
Montreal Canadiens won the Stanley Cup that year. So there you go.
Do you play hockey or what?
I don't. My kids play.
Yeah. Did you?
Oh, yeah, but road hockey.
Oh, okay,
yeah, road hockey. So
you're not gonna be on the ice going crazy, will you?
I'm fairly soft hands. I'm not chopping onions with a stick.
You think you still got it?
A little bit.
All right.
If my back holds up. Yeah. So question again was, what was the landscape like?
Yeah.
Very different than today. And I think if you pull older CAs like myself, they're typically got mixed reactions to this merger type of thing. Back then, without being too uppity about it, the CA was the top sort of
top dog
accounting related designation you could have. In fact, I think we also think globally. It's more of a British, I think, chartered accountancy versus the US kind of CPA was always, from our perspective, we looked down on.
The CGA, you mean?
No, that CPA was US.
Oh,
so
really?
CPA didn't have a presence in Canada.
Okay.
So sticking with Canada then, so I don't digress, it was kind of CA, CMA, CGA. And I apologize for those I've offended, but that's just the way I saw it at the time. And that was many, many years ago. And so now you have a merger. I haven't followed it super closely.
Yeah.
But I am very proud to not have just CPA after my name. I have CA, then CPA.
It's almost how I feel like when I call Rogers and they're like, "Oh, you're on a grandfathered plan." I'm like, "Yeah, you better address me as such."
Yes, as grandfather.
Yeah. I feel like the man. Okay,
Yeah.
So you get this accounting job. Now, is that the first time that you made $100,000 in a year?
No. In the 4 years I was at Ernst & Young, I went from a $30,000 salary at a university, which was a decent amount of money back then.
Yeah.
So that's September 26, 1994 is when I joined Ernst & Young, really as a punk, doing photocopying and running errands and dropping off checks and making coffee.
Yeah.
And
you still got that, by the way. So thanks for the coffee. Appreciate it.
Yes, no problem. I hope you enjoy it.
Yeah.
And so that 4 years at EY, in those days, you didn't move much until you got your letters. When you actually passed the exam, which was a tough exam back then. I'm sure it's tough now too, but it was really tough back then.
Yeah.
Then they started moving you at $10,000 a year, $12,000 a year. So the first couple of years, usually about 24 or 30 months, you really can't get your letters any faster than that. There's a few ways too, but really it takes that long. So during that time, you're just getting very minor inflationary increases.
Yeah.
But as soon as you get your letters,
different.
It's in the Globe and Mail. Everybody knows you've got your official stamp, and then the phone calls just start coming in those days.
Really?
You come into the office and your red light with the voicemail on your phone was just blinking like crazy. You'd have like 10 to 15 headhunter calls.
Really?
The market was that strong. So my time at EY in 4 years, I only went from 30 grand to like 60 grand.
Okay.
Right. In those 4 years. But the last two, they started moving you more by tens and sort of that type of thing.
Yeah.
And then I left. Yeah.
Now, when did money become like a thing to you? Because yeah, it doesn't seem like you cared that much. Well, maybe you did because you were CA, but you weren't making too much. Right. But
well, I think,
I don't know. Well, within me, I know there was a distinct moment specifically where I'm like, oh, damn. Okay. I kind of need this in order to do what it is that I want,
Yeah, it's a good question. I have to reflect on when that trigger happened. I think I think it kind of goes back to, kind of Maslow's hierarchy where you go, okay, I got this covered, that covered.
Mhm.
So I just focusing on the basics, right? Not that I didn't. My parents obviously gave me food, shelter, safety, board, and room and board and all that.
Good hair too.
Thanks, Dad.
Yeah.
But when I started to think, so you wanted to preserve that.
Mhm.
And so I think you just thought, well, what? I need a degree. Okay, good. Now I need a second degree. I need some letters. I need a stamp, as my parents used to say. You need a stamp, right?
So do you think you actually wanted it, or it was because your parents were encouraging you? Like, did you do it for you, or did you do it for them?
Oh, I did it out of fear. I did it completely out of fear, which was thinking, oh man, if I don't do something that is hard to get or tougher to do to distinguish, I could wind up living in a cardboard box. That's what I say to my son all the time. Hey man, do you want to live in a cardboard box? Get in that room, start studying, right?
Okay.
So negative reinforcement, I would say. Negative self-reinforcement, I guess.
Mm-hmm.
So yeah, I kept going. And that switch where it came, okay, it's game on. Now I just want to, do good work, be a good person, but also I want to kill it.
Yeah.
That came much later.
Really?
Oh yeah. Well into, sort of executive. I became an executive at TMX in 2009.
Okay, listen, let's not go too fast.
Yeah.
Let's not go too fast.
Okay.
You're getting me excited.
Yeah.
But yeah, because I want to ask like a million questions, right?
Yeah.
But I got to take it one at a time.
Yeah.
You got to bring the audience on a journey, right?
Yeah.
So what did it feel like the moment that you finished that exam and all of a sudden, everybody's calling you? You must have been. That's what it's like being the hot girl at prom, eh?
Well, first of all, there's two things, and I'll bifurcate your question, or at least in my answer.
Please.
Is that I remember walking out of the fourth. So the exam is 4 days in a row, 4 hours a day. So it's 16 hours. It was at the bingo hall at Queensway and Kipling Road, which I don't think exists anymore. And
Queensway and Kings and the streets do the bingo hall.
Yeah. Where the streets do. Good one. They haven't rebranded that. Well, I was going to say something.
You're talking about the 4-day exam.
Yeah,
how you felt walking out.
So when the there's a lot of people don't realize what these young CAs go through, because unlike law and a bunch of other designations, the real gate or the pinch point where you find out if you're going to make it or not for CA comes at the end. You put in 30 months or whatever, and you invest and you work at a lower rate like I described, even though I was pretty happy in 94 with 30 grand.
Rich guy.
It all comes at the end, because there was a 52% pass rate.
Holy. So
So 48 out of 100 people, even if they got 90% on the exam, they would fail.
Wow.
Because it's curved, right? So that's how many they're going to admit. So
Okay.
our coach used to, and EY hired a coach for us, an exam writing coach.
Okay.
He's not teaching you the subject matter. He's teaching you how to score on that exam.
Okay.
But you don't find out till the very end. So you got these kids that have put in 2-3 years of work, and first time. And the worst thing is, if you fail the first time, if you're with a big firm, they'll let you write it one more time. But the stats go down. Second attempts, you would think that this is the data back in the day. Second attempts, you would think, oh, okay, maybe you'll do a little bit better this time because you've been through it. You do worse on average.
Yeah. So did you pass in one? You passed in one?
I did pass in one.
All right.
So back to your question, how did I feel? Oh, I just threw all my papers up into the air, and I wasn't thinking about recycling at the time.
Yeah.
And so it was super exciting. Jumped in the car. I thought I absolutely crushed it and aced every aspect of the exam. I thought I got 100%.
Okay.
I did better than barely pass.
Okay.
But man, it wasn't as good as I thought it was. But the celebration was great.
Wow.
That's writing it. And then when I found out about it, it was, I know this is a long answer, but it's a very seminal moment.
Okay.
In my parents' house, was at home. The tradition at EY was we all went out to the Unicorn pub and got absolutely smashed, carrying guys home and stuff like that, because the next morning is when it would all come out. and you would figure out whether you passed or not.
So everyone was smashed, but even pass or fail, like we're going
Well,
out
it was the night before.
night before.
Night
okay.
before, so no one knew.
No one
right?
knew.
So I remember being so anxious that I actually took up housekeeping. I was scrubbing the bathtub in the shared bathroom that my brother and I had, scrubbing, and let him do the online check. And let me tell you, online back then was like dial up,
Yeah.
and waiting for it. And I think he called me over, if I'm not correct, to the office off of my parents' bedroom, and goes, "I want you to look at something." And scrolling, and there was my name. So if your name's not there, you didn't make it.
You didn't make it.
And so then I just sort of.
And is this the same list? Like, was this the same list that the Globe and Mail was pulling to put you on, or to put you guys in the newspaper?
Yeah, I think they still do it, but the tradition, and now other organizations like the CFA organization, they do it and stuff like that.
Yeah.
But they pull from all the firms.
Okay.
So it's actually, they get again, I'm talking about stuff that happened a long time ago,
That's
so
okay.
I don't know if it's changed. But they have all the firms, anybody who passed. So it was a big deal.
Yeah.
And then you get into the office, and it's a big
It's a party,
celebration, right? It's a
I'm
big
just picturing
party.
like Wolf of Wall Street, like everybody going crazy.
Yeah, it was fun. Yeah,
Yeah.
we had lots of parties, and we went out again, and then the next day it was just like a days and days of parties, and then we had a big convocation at Rosedale Golf and Country Club.
Nice.
So we all went there, and
You remember over there?
No.
So wondering, you know
Yeah,
what I mean?
no.
Like,
No, I've played the course a few times, but I'm not a member now.
yeah. How's your swing these days?
It's good actually. You spend time playing a ton of golf, and then you got to go to university, so you have no money and no time, so you don't play. And then you're trying to get your letters.
So you played golf before university?
Yeah.
How?
At age 15, I started playing.
How did you get into that? Your dad put you on?
No. My buddy's dad. So a buddy on the
Okay.
street, Derek Wright, and his.
Shout out Derek.
Yeah, shout out Derek, wherever you are. His parents got divorced, and the thing that his dad would do when he came over would take Derek golfing.
Okay.
So I guess Brian was his name. Brian Wright said, "Hey, you got any of your other loser friends here want to come with you?" So myself and a couple other guys would hop in the Pontiac Parisienne and go off to Lakeview Golf and Country Club, Dixie Road and QW, and tee it up.
Okay.
So Derek's dad taught us the basics, and then we went from there.
So my mom had me at 17, right? So I didn't have no golf exposure experience.
Okay.
But then, she had my little brother, little sister once she started getting older, and moved to, a richer neighborhood as she got richer, right? And my little brother played hockey. I didn't play no hockey, right?
Yeah.
My little bro plays hockey. My little sister plays hockey. And so all of his friends and their parents, they got country club membership. They got all this stuff.
Yeah.
So he's like, "Yo, come to the driving range." I'm like, "Driving range?"
Yeah,
I'm like, "No, driving range." And him and all his friends are showing me up. These guys are hockey guys, right? So they know how to do the thing. They're giving me I just found out that I hit the left, right? And they're like, "Oh, all of our things are right." So I was out of luck. But I ended up trying, and I was terrible. And I'm still terrible.
Everyone is.
That's okay.
Yeah.
We gotta start somewhere, right?
Yeah.
And I remember distinctly, like the people that were playing golf, completely different than the people that I was around. And that exposure really started changing my perspective. Did you notice anything different when you were at the golf course at that young age, or?
No, I don't remember that. Because I think I was so engrossed in just trying to learn the game.
Yeah.
And we were young at that time. We weren't really appreciating all the
amenities,
social aspect of it. Like we learned the etiquette obviously early on, so that you can carry yourself at a golf course and not get thrown off. But the idea,
learned that,
the idea of kind of networking and doing other stuff like that, no, not till a lot later. We were just hardcore golf addicts, right?
Okay.
Sleep, eat, dream.
You still in it like that, or what?
No, you go through phases, and I think I'm in a phase right now where I'm getting back into it now. As of last year. So I used to play 40 rounds a year in my 20s and 30s. And then, career, kids, stuff comes along, and you get busy.
They call it a foursome, right? That's what the team is. We'll set one up in the summer. As long as you guys got patience, we'll go towards the end. That way, there's nobody that comes behind us, and Yeah, I'll see if I can keep up. Probably
Yeah.
not, but
Yeah,
the
no problem.
intention's there.
That'd be great.
So what do you think one of the biggest lessons from EY was? What did you learn from being in a company like that? I remember I studied accounting, dropped out of CPA after the tax exam.
Okay.
And it was the first exam that I ever failed, right? I was always one of those people that could just like open the book and like do well, right? Lucky me. So I never really studied, never had study habits, never really paid attention to like how to learn, and more importantly, how to score. So, which I'm going to revisit a little bit later. We'll save that to the end. But generally, I always wanted to get into these big four accounting firms. And it was, pretty funny when the moment that you said Toronto Stock Exchange, the moment that you said accounting background, I was like, oh man, I got to talk to this guy. And then he had all the juice in person. I'm like, yeah, okay. He's got star power, man. We got to get him on the show. Now, I remember every year, September would roll around and everybody gets into the first week of school, second week of school. And they're like, oh, did you get your internship? And I'm like, internship? What are you guys talking about? Right? And they're like, yeah, like, I got into KPMG, I got into EY, I got into, I'm like, when did you guys apply? And then I look on the thing, closed. And I'm like, bro, it's the first week of school. What do you mean closed? And they're like, yeah, the application window closed in August. And every single year I would miss it because like summertime, dude, I'm a broke student, right? I'm trying to hustle.
Yeah.
And I wasn't paying attention to internship. I'm not traveling and going hiking in the summer. My parents like, yeah, I got someone that could line you up with this. So I would get the tail end of the stick every single year. And I'm like, yeah, I don't know if this accounting thing's for me. But then I still ended up going down the CPA route. Failed the first, it wasn't the first exam, it was maybe like third or fourth or something like that, the tax one.
Yep.
Picked up a camera right after. And what was crazy is that, ended up going down this whole route. Right before COVID, I ended up starting focusing on conferences. A big conference company ended up asking for a discount, and we traded discounted services for monetary plus half of their office. And the office was in the old Toronto Stock Exchange building.
The Design Exchange.
Exactly.
Okay.
And what was crazy is that it's in the middle of, it's on Bay Street.
Yep.
Right? It's right across from all the accounting firms. So I felt like, I made it. And I did it on my own. So it was
Excellent.
crazy. It's such a crazy feeling. And, that's part of the reason why this episode means so much, right? It's like, we got to dive in. But yeah, I'm really curious. What were some of the things and experiences that are most memorable of being at one of those big four accounting firms?
Yeah, a lot. I mean, you learned a lot, and I'll try and get specific. But I can tell you that I look back on that time with two main feelings. One is dread.
Okay.
Because I enjoyed parts of it, but there's a lot of parts I didn't like.
Yeah.
And it was a grind, and it really showed that I didn't really want to be there for a long time. And I couldn't see myself being a partner.
And what made you realize that? Actually, keep going and then I'll
So just to finish off, that was, I just didn't find it. I only found pockets of things that were really, really enjoyable. So there were certain engagements and certain clients and certain partners that I really liked. Otherwise, I guess it just seemed very dry and very micro detail, too detailed. So I enjoyed the bigger picture things, or an engagement that would maybe be about consulting or internal controls or corporate finance, or was doing a review engagement or something that's more understanding the business, understanding drivers and stuff like that. And yes, of course, the numbers need to make sense.
Yeah.
But grabbing a trial balance and checking it to source documents and figuring out where this and that goes, it was just not my thing. But here's the but part. The fact that I learned how to go through all that has been I've leveraged it so much in my career that now when I look at a company or I look at a financial statement, people just see the pages that are there, but I can almost picture in 3D what's below there.
Okay.
What's under there, and you really understand a business, any business, from the bottom up.
Okay.
So that's a big technical learning, you might call it. And then I think professionalism. I don't know any other way to say it. Is just how to conduct yourself, ethics, professionalism, independence. So these are things that
When you say independence, what do you mean?
well, independent thought, an ability not to sort of to look at what's right, like what's the higher purpose of, your disclosure as a public company or your financial statements or whatever. It's always got to be thought of in a way that, true, full and plain disclosure, ethical, that type of thing, and not swayed by, well, if we book it this way, more people will buy the stock and that'll be better. No. It's about getting the truth out there, getting the best information out there, no matter how much pressure you have.
Got it.
Right? Whether that pressure is coming from a client, an investment banker, a lawyer, whoever. It's just so you kind of get that confidence to stand up for what's right. So there's some professionalism, I think, that you get from having that being your alma mater and where you spent your formative years.
Yeah.
As much as I had dread in some of the day-to-day, I look back at it and go, it paid huge dividends.
Yeah, it's crazy when you think like going through something, it's so painful. It feels like it's never ending. And then the moment you look back, it's like, oh, it's done. Wow, I guess I did learn a lot through that.
Totally.
And it's crazy how fast time flies. And recently I've been thinking a lot about intentionality with the way that I spend my time because I don't know about you, but I turned 32 recently.
Okay.
On my 31st birthday, one of my friends goes, 19 more years till 50. And all of a sudden, like, everything snapped. And listen, you're almost 50.
No,
so,
I'm 53.
Really? Dude, you look great for 53, man. What's the secret?
Have fun, have good family, good support.
Yeah.
I
and
think
order overpriced glass from Australia, right?
Oh, yes. Austria.
Austria, sorry.
Inside joke.
Yeah, sorry, you had to be there.
Yeah.
Okay, so now you're done this accounting stint because you walk in now and all of a sudden you got a red light on saying you got voicemails.
Yes.
Okay, you're excited.
Yes.
Your name was in the newspaper, which is like, I mean, at that time, is a thing.
Yes.
You were in the papers. Do
Well,
you still
a newspaper was a thing too.
Yeah. What's up, Rumi? You want to pick her up and show the...
Okay, you want to come? She's pretty... I don't know if she'll actually let me pick her up.
Well, show the audience that we got a... No. Yeah,
I
show...
almost grabbed a tail, which
Yeah.
I would never do, but here we go. Say hi, Rumi. Hi.
All right. So we have a guest joining us, our special guest on this podcast episode. Her name is Rumi. And so Rumi, tell us. No, I don't have any questions for you, actually. She's like, let go of me.
All right, I'll let you go. Thank you, Rumi.
All right. Yeah, thanks for being... So if you guys hear a little bit of jingling, it's just because there's a dog here,
Yeah.
No, so whatever. You got to deal with it. If not, we'll see you on the next episode.
Yeah.
But for now, back to Ungad.
Yeah.
Yeah. So you walk in and all of a sudden you got this red light on your machine. You must be thinking, okay, this is it. This is the moment I've been waiting for. I did all my schooling. I'd passed all these 16 hours worth of exams plus additional exams. I put in these 4 years. I got my hours. I got my letters. I'm good to go. I'm a millionaire now. No,
not quite that fast,
Okay.
but certainly it was really a great feeling. It was a rush. And then the challenge there was, you get a lot of calls, but they're all, for the most part, a couple of, maybe one standard deviation away from, oh, do you want to be an assistant controller? Do you want to be a junior treasurer? Do you want to do... So something in that whole finance realm.
Yeah.
Or accounting and reporting realm. So there's a lot of that. And then there were some other categories. So my approach was, hey, actually, all of a sudden, when I got my letters and I know I'm not an imposter, I can actually do this, and I've got the letters. For a little while, it was like, this work's actually not that bad. Let's just plow ahead. So all of a sudden, it was like a bit of a boost. So I wasn't really looking to jump right away.
Okay.
So you just sort of like, these calls would come and you'd kind of maybe talk to a headhunter or you wouldn't. You sort of test the market and see what's out there, and everybody was doing it.
Yeah.
And
like when you say everybody, you just mean colleagues at your firm,
the
for example?
colleagues, because I can't remember, a couple hundred or maybe 300 or 400
Crazy.
across the country of newly minted CAs every year. So there's other people, but Yeah, it wasn't the idea that, okay, I'm jump right away.
Yeah.
So yeah, 90, probably about a year or so, I think, before I actually made a move. And that was based on a very specific, very unique call that I got. That when I told people what I decided to go there, they're like, "What is that?"
All right. So let's dive into that. So at this accounting firm, now that you got your letters, were you making $100,000 a year at this point?
No.
Still no.
No. The entire life inside the public accountancy spanned $30K to $60K.
Yeah.
So
wow.
that was what. But you could buy a lot then.
Oh yeah, true.
that,
I guess
yeah.
with $60K, you could probably buy a house back then too, right?
Not quite, but close.
Well, I mean, you could probably qualify for a mortgage, no?
I don't know. I wasn't in that sphere of thinking at that time,
Yeah.
but yeah, I mean,
What were you spending your money on at that time? I've never asked this question before, but I am pretty curious.
oh boy. I think then, well, typical young guy from, I don't know, Mississauga, is like a car, right? So it's like, okay, I'm gonna go get my own car.
Little BMW, right?
I didn't go straight to
yet.
the Beamer,
Okay.
but I went for the Honda Prelude.
There you go.
Yeah. So, and all my friends had the same car anyway, so we did that. And then, yeah, I guess we'd spend it more on. I started golfing again, stuff like
Okay.
that. So I'd shut the golf down for a while,
Yeah.
but not really much, nothing crazy.
Okay.
Yeah.
Okay. So now, when you started exploring additional opportunities, why and where? So you're saying a bunch of calls were coming in.
Yes.
Were you in right now? You still don't have social media.
Correct.
So back then, you probably didn't have social media.
No.
Are all these calls still coming from that newspaper feature?
Yes, indirectly. I think
Mm-hmm.
the placement agents, or as we used to call them, headhunters. I don't know if that's a bad term now, but they would have the source, right? They can look in the CA Institute, so you can go to the Ontario Institute and get the list, and you can just work the phone, right?
Okay.
Because and just call people, and so that was the incoming. Yeah, and they all had the firm that I went with. I don't even know if they're still around. It was called Lanick and Associates. I just remember that.
No, they are. They are.
Yeah.
Yeah, they were. Back when I was accounting, they did it. They gave me the same call.
Yeah.
Yeah.
So
that was actually where I got the last accounting job. The last job that I ever worked, dude. It's crazy. Oh my goodness, man! If I tell you this story, you'd lose your marbles.
a lot of similarities.
But this is your show. That's not my show. It's your podcast.
All right.
Yeah. So now these headhunters call you, and do they call you with this TMX opportunity? Like, what was the call that you got that all of a sudden made you say, "This one's different.
Yeah.
This one's interesting."
Well, it was. Back then, it was a different entity. It was called TSC, Toronto Stock Exchange, and they had an opening for a junior over-the-counter market that they owned and operated, and it was actually the only. So TSC back then was a not-for-profit.
TSC,
Yeah,
Toronto
Stock
Sierra Charlie.
Exchange. Yeah, it's what's called a mutual. So it means you have members.
Okay.
And instead of having shareholders that hold shares, you have members that hold seats.
Almost like a credit union.
Like a credit union.
Okay.
And, even all our insurance companies in Canada used to be mutuals.
Okay.
And so when I started, we didn't have shareholders. You had members. Members, most of them were the banks and the broker dealers.
Okay.
So the main exchange was all structured as part of that mutual. And they had one small little company at the bottom called the CDN, the Canadian Dealing Network. And that was like the OTC market in the US, over-the-counter market. That was actually a for-profit unit. And they had said, you know what, we're looking out west. You've got these other exchanges like the Alberta Stock Exchange, the Vancouver Stock Exchange, Montreal, Winnipeg, and this idea of junior, more entrepreneurial companies accessing a stock exchange, even a smaller stock exchange or a stock exchange for smaller companies, is growing like wildfire. So everything, and we're all of a sudden seeing all this pickup in interest in this little product we have.
Now, when you were seeing the pickup in interest, had you already made the jump?
Yeah, well, this is more me joining, and after joining, understanding what the business was, and then understanding why the TSC at that time had decided to invest in this small little asset that they had in the basement of the TSC, if you will, or TSX.
Yeah.
and decided to, hire some lawyers, hire some accountants, and really try to now compete with the Vancouver Stock Exchange, the Alberta Stock Exchange.
Wow.
So going in, I didn't know any of that.
Yeah.
But over the course of the first 6 months, you learn that. So that's the rationale. That was the call I got, and it was so different because I thought, wow, it's kind of like building your own like stock exchange kind of from scratch, sort of. And then I thought, well, from a downside perspective, if it's at a minimum, if I go in there for a couple of years, it's like getting a paid MBA in Bay Street and how it works, because at the exchange, you're sitting right between the buy side, the sell side. You're not quite a regulator like with a big R, like you're not the OSC or the SEC. And so I thought, that might be a really cool place to do my next degree.
Yeah.
And so that, plus the fact that my father is now and has always been a big person in the market, like he plays a lot in the market or invests a lot in the market.
Yeah.
So I had some background as a kid.
Yeah.
Being exposed to that.
Okay.
And so all of it sort of came together, and I said, let's do this.
This might be an interesting opportunity.
Yeah.
So now you mentioned your dad was big into the markets. Now that was your first exposure, yeah?
Yes.
Now, do you remember the first stock you bought and when?
Oh, it's not the first stock I bought. I bought a mutual fund first.
Okay.
I remember it was TD Green Line or TD Investor Line, which was a telephone-based broker discount where you could phone in. You had to phone in to get a quote. So quotes weren't online.
And this is part of what I'm really excited to dive into, right? Because you were at the Toronto Stock Exchange before it was like what it is today, right? It's grown to massive, right? And you went through the
demutualization
.com.
Well,
I only know the public stuff.
Yeah,
I don't know this. I'm not an insider.
Yeah, that's right.
Not yet, anyways.
Well, give me a call. I'll help you with that.
All right, done. Consider it done. You hear that, club, 100K club? You can call Ungad if you got questions. Maybe not, but like 2000, there was the .com crash. Then you have the whatever happened in the U.S. 2008, 2009 with the real estate
crisis,
right? And I'm sure there was a couple others that happened in the meantime that just didn't get as much press. But that whole transition from telephone brokerages to online brokerages and like with different banks offering all sorts of stuff. Yeah, we're gonna dive in. So, but before we get there,
sure,
you're saying.
What was I saying there? Just about the call and coming into, I think I forget where we were.
Green Line Mutual.
Oh yeah. So the first one I ever bought was a science and technology mutual fund that my dad had suggested. Like, listen, the future is tech, right? So.
And that was your first 100K in a day.
Yeah, I wish it was, but it was. I ended up bought some units. And then I think also, a lot of credit to my dad, I should give some to my mom soon too, but on this podcast. But the idea was dollar cost averaging. So once I was working, I think at the time I was at EY, I just set up the direct deposit to TD every 2 weeks, every pay. And so I kept buying over the course of 4 or 5 years. In the late 90s, I guess mid 96 onwards, every paycheck would just buy some of those TD Science and Technology mutual fund units.
Wow.
So that was the first time I was like, wow, I actually made some money. Like if I bought 10 grand worth of the stuff, it was worth 40 by the time I was done. So that was the first sort of taste of it.
Wow.
But I used to do other things even before Excel came out. Like I used to do the spreadsheets with my dad for his trade tickets, right? Like I would do it on like your green ledger paper, right?
What?
I think Lotus was out then, Lotus 123, which you wouldn't even have ever heard of. But people weren't using spreadsheets a lot yet. So I was doing, this is in high school, before high school.
Okay.
So I had some exposure.
What are you doing with spreadsheets when you're like, I was doing spreadsheets? What are you talking about?
No, I wasn't. Well, what I was doing is back in the day, you would get a paper trade confirmation every time you did a trade, a buy or sell or whatever.
Okay.
And so if
where would that come from?
My dad's, sorry, I should have mentioned. So my dad's trading.
Okay. Over the phone though. So he calls in.
Over the phone, or at that time, a full service broker. If you had your own, like a real broker,
Like
you'd
a
phone your
IA
broker,
for-
an
okay.
IA.
Okay.
They would do the trades for you.
IA is investment advisor.
Yes.
Yeah, sorry.
And so, come to the end of the year, even for tax purposes, you need to know what's your cost base, what did I buy, what did I sell, report your capital gains, report your losses, net them out.
Wow.
So even from that perspective, if you're someone like my dad that did hundreds and hundreds and hundreds of trades.
Oh, he was active.
Yeah. So you have to sort of go through all that.
Mm-hmm.
So, he would say, hey, listen, can you add up all the Moss Lawson trade tickets, all the McLeod Weir tickets? Like these firms don't exist anymore. They've all been swallowed by CIBCs and others. But back then there was a big, a lot of smaller firms that were out there.
Wow.
So anyways, all to say is that when I got the call and they said TSC something, blah, 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 I kind of had a little bit of a toe that had been dipped in that pond, and so I decided to jump in.
Really cool. So would you say that was the first time like you made like investment money? Would you say like first time making capital gains?
Yeah. The TD Science and Technology Fund, which was a mutual fund.
How did that change your perspective? I remember my first real estate refinance changed the way that I thought about money forever.
Yeah.
I'm curious.
Well, it changed my thinking in a couple different ways. I don't think the way most people would expect, because I think people would say, oh my God, I bought a stock and it went up 3 times and now I'm in love with this and I'm going to look at like, why go to more schooling? Why work hard? Because I can just do this. No, that wasn't my reaction.
You bought a stock and said, I'm going to be the president of this thing.
No, not quite that. But I think what I learned was the power of dollar cost averaging, in the sense of set it and forget it.
Okay.
So I think I've always been a little bit more conservative. And so that idea of just seeing the power of compounding that investment as you put it in, it continues to spool, provided you're not taking too much, you balance your risk. I just love the idea that, listen, if the units were trading up in a certain week, you'd buy a little bit less with your same amount of fixed dollars that's going in. And then if it was down, you'd buy a little more units. So you'd be always sort of averaging in. So I think what I learned there was I was a big fan of those structures. And so throughout my career, I tried to sign up for those things, whether it was a employee stock option plan at, not stock option, employee share purchase plan at TMX. For my kids, even their RESP. Okay. I did a set it and forget it. Yeah, calculate the max that the government will match, and then set it and forget it. And so, my son was, he's 18 now. Nice. So
did it work?
Born in 07. Yeah. I mean, all I did was do the same thing my dad told. I did the TD, wasn't a science and technology fund. I think it was just the TSX index tracker. Yeah. So it was kind of like an ETF wrapped in a mutual fund. Okay. Second week he was born, I just walked downtown and went there and signed it up and set it up. And now he's going to university next year. And I look in his account and it's like well over 6 figures. Wow. It's just sitting there, right? Wow. Because it's just over time. Been compounding for the last 20 years. So I don't think I ever got so crazy about the market that I was just going to take big swings and take super high risk. Yeah. So that's what I think, that was the taste that I got. So I wherever I have been able to do that. Okay. I really like those ones. So talk to me about the way that anybody can set up their financial future when they're first starting work or just having a kid. Now, the reason why I asked this, right, is not everybody has a dad who's been trading in high volume and like, hey, help me run these spreadsheets. You got exposed to something that not everybody has an opportunity to get exposure to. So like, let's lean on Ungad, everyone's stepdad on the show. Tell us what's up, man. What do we got to do? Let's say we're just starting our business and we don't have stock option plans. Let's say we're just starting work and we're looking at getting our financial base. Let's say we've never saved before and just had a kid. Are these different scenarios, or is the starting step all the same? Talk to me about how to build that financial house. Yeah, I guess a couple. First of all, I'd caveat, just because that's that's my training. I caveat it by saying like I'm
this is not financial advice. Don't talk to your
well, you
whatever.
nailed it. And plus I'd go a bit further to say I'm not a financial planner, I'm not an IA, and I'm not an advisor. So I don't advise on wealth management, but from personal experience helping out, friends, family at different stages of life, I mean, I don't think I have a lot of rocket science to offer, but what I always, how I did it or have done it is always thought about classic things like living within your means, reducing. I hate in personal finance, household finance, I hate monthly things that are monthly. So I've always carried huge disdain for my cable bill or my phone bill or my, these other things where I haven't even ever leased a car because, I mean, sometimes the math works where it can be better, but I've always just like, I don't like this idea of that monthly drain on cash flow.
Okay.
So I think trying to not leap into, I got to have the best car or I've got to have this, that, and, I can afford it based on cash flow. Mm-hmm. I've always thought of it more long-term as a balance sheet. Like, okay, is my equity decaying over time or is my equity increasing over time?
Okay.
Not, can I afford this based on, it's a 36-month lease and, it's only $800 a month for the car. I can handle it. Mm-hmm. It's sort of thinking about what's the opportunity cost of that $800 a month if I plugged it into one of those other vehicles I talked about.
Okay.
Whether it's a dollar cost averaging, a dividend reinvestment plan, what have you. So I think that's important.
So just want to catch you guys up to speed, just in case you said a couple terms. So we had balance sheet, we had net worth decaying or appreciating, and then we had I think a DRIP.
A DRIP is a dividend reinvestment plan. So these are all things that are you can still find them. They're on autopilot.
Yeah.
Sort of set and forget.
Listen, if you are curious about what some of these things mean, if you type in whatever the word that he said was, and then just type in Investopedia after it, it'll pop up and give you a full description. So
good advice.
Yeah.
Yeah. So I mean, those are the things. I still see today friends and family who this sounds so basic. Like you look at, just read the Globe and Mail, or Rob Carrick will say this, or whoever. Everyone will be saying this. You got a TFSA. Everyone has a TFSA. There's no requirement to have income levels to earn that slug that you can put in every year.
Yeah. You
can take it in and take it out. Mm-hmm. It's tax-free compounding. It'll never be taxed. Mm-hmm. There really isn't any reason, unless obviously you're just you're hand to mouth and you just don't have any excess capital. Obviously that's an issue.
Yeah.
But otherwise, things like TFSAs got to be all over that. RSPs, and I would say getting in early and starting early is awesome, because even if it's a small amount that you're contributing, it just builds and builds and builds. So, I mean, again, I'm not an advisor, but those are the things that I kind of.
Yeah. So when did you end up making this first $100,000 a year?
I started making first $100,000 a year. I don't know what year it is. I want to say it was around 2000. Around 2000 or so. And my boss at the time, Kevin Cowan, who's now the chairman of the Ontario Securities Commission.
Shout out Kevin.
Yeah, shout out Kev. Great skier, snowboarder, writer.
You think so?
He actually makes me sick because he's good at everything, but I still love him.
All right, Kevin, take that as a challenge next winter, man. It's a race.
He'll crush us. He's
speak for yourself, eh?
I should have. Yeah. No, he was chair of Osler Ski Club, and he's a hell of a snowboarder. But take him on. I'll make the intro.
Yeah, all right, done. You think you'd be a good fit for the show?
Nah.
We'll see. If he could beat me on the slopes, then we'll consider it. Okay.
Sounds good. So he actually he left his law career. He was much more senior than I was in my relative career at EY, but he left his law career to join that part of the TSC they wanted to invest in.
That's the CDN?
The CDN. Oh, good. Excellent memory.
Working on it.
And so why was I talking about that?
Because we were talking about first $100,000 in a year.
Yeah. And so Kev called me into his office, and we were then merging with, at that point, this little thing that could, the engine that could, the CDN, was merging with the Alberta and the Vancouver Exchange. So we were forming a pan-Canadian junior stock market to compete with certain aspects of the Toronto Stock Exchange. So this is where I actually left the TSE for a while, and we created something called the CDNX, the Canadian Venture Exchange.
So what's the difference between a stock exchange and a venture exchange?
Yeah, they're both, it's just a tiering, right? So you've got stock exchanges. The basic thing is they make money three ways: listing, trading, and data, the traditional stock exchange. So listing fees are what corporations pay to list. Trading is what the traders or investors pay when they have a brokerage fee, and so on. And the data fees are really what, buyers of data and consumers of it, both the traders and the pros and the public, when you go to Yahoo Finance or you get a feed from Stockwatch, that's all revenue to us.
So for instance, Stockwatch or Yahoo Finance are paying the exchanges to have that data listed on their, sites,
either directly or indirectly, one way or another.
Okay.
Those are the three revenue pillars.
Yeah.
And again, we didn't even really focus on that until we demutualized and then became a for-profit company and then went public.
Okay.
Because we didn't have that sort of focus. But now it's a $12 billion, I haven't even checked lately, I'm still a shareholder, but $12 billion public company that has more business coming, I understand, I'm not watching it day to day, from non-stock exchange related revenues. So it owns all other businesses. But we were talking about how
First 100 in a year.
First 100 in a year. I got to come back to that.
That's okay. Back to center.
So back to center. Thank you. So we're at the CDNX. Kevin calls me. It's the 6th floor of the Exchange Tower, 130 King Street, into his corner office.
Dude, it sounds like you remember this like it was yesterday.
Well, it's a big moment, actually. I hadn't thought about it for decades till you mentioned it. So we go in there, and my salary going into the meeting was 90 grand.
Okay.
And I kind of thought at that time, well, hundreds of that's just like a number.
Yeah.
Like I used to tell my brother shit like, oh man, when I make 100, I'm gonna buy like a Nissan 300 ZX.
And life's gonna be different.
Yeah, my brother's like, you'd buy that car? Like you'd waste everything you've worked for on that. So I was like, oh, you're no fun.
Yeah.
And so Kev goes, hey, great year, slides a piece of paper across and goes, here's your new comp, right? He gave me my bonus, which was nice, but then here's new comp, 110.
Ooh.
So he did a 20K increase.
All right.
From 90 to 110, which I'd never seen a $20,000 raise.
Yeah.
Ever. So I was just, oh my God, this is amazing.
And did you buy the Nissan?
No, I didn't buy the Nissan. But I think around then I did buy the first Beamer.
Yeah.
I did buy the first Beamer used at auction in Milton at the auction there.
But you just made a 20K bonus. Why are you still looking for such a deal, man? Why don't you go buy something new off the lot?
Back to what I said earlier, right? Live within your means and always thinking about balance sheet versus hose. Can my monthly budget handle a car payment? And I said, well, listen, I always buy 3-year used cars.
Okay.
That still have some warranty on it.
Right, because the depreciation curve, that's its optimal point.
You got it. The paper depreciation exceeds the mechanical.
Okay.
And I jump right in there. Okay. And you get a big discount, and you have mechanical certainty and a warranty for, let's say, a year or change. So if something big's going to happen, you probably know by then. And then you're so far ahead of the game. People say, oh, I don't want a car in the 5th year or 6th year because, then it needs repairs. Yeah, like humans need repairs too. What's the problem?
I need repairs after 5 minutes.
Yeah.
My knees are...
So then you run that car from that marker from 3 years old to like, whatever it is, 10 years old.
Yeah.
And I always used to have fun when I finally sold any of my cars. I would go back and I would roughly calculate my total spend.
Okay.
What I bought it for, what I sold it for. Then I would look at any major repairs, and not even maintenance if there wasn't big repair. Maintenance was pretty small back then. And then just take a look at that and divide it by the years or divide it by the months. And I used to get a kick out of driving kick-ass cars like VTEC Prelude, a 328 IS, Beamer, and an M5, all these cars and where people would be paying $800-900 a month in lease, and by the time I'm done after a 7-8 year period, what was the total cost? $280.
Yeah.
$280 a month.
So you're playing in the 3-year to 10-year range on cars. That's a useful, very useful
3 to 8,
tip.
and then make good have buddies that are mechanics, right? Make friends with your mechanics, right? Treat them like gold.
Dude, it's so important to make friends with the people that you want to learn from. I think that looks like I got to go to the washroom.
I think there's going to be a little, if we can do a podcast break for the doggy.
Yeah, and we'll be right back after this commercial break.
Hey guys, it's Ungad again. Just wanted to interrupt the episode for a minute to tell you a little bit about Urban Infrastructure Group. And whether you're an investor, a home builder, or somebody looking for a job in construction, you can check us out at urbaninfrastructuregroup.com. Thanks a lot, and back to the episode.
Where we just left off was your you get in the 20K race, talking about depreciation curve, okay, and you were talking about the 3 to 10 year gap on that's where you get the most juice for your squeeze.
Car.
You like to calculate the average, see how much you won. You get a huge kick out of it. Now, where else do you get these small, like here's the thing. So this is like there's an unrealized gain. It's an unrealized expense in some capacity, right? Because you're measuring the opportunity cost. Where else do you measure the opportunity cost and get excited in your world these days?
I think most of my friends would know, like the joke is Chadda don't pay retail. Like I don't pay retail for anything, right?
I have a friend like that. His name's Alan, man. Shout out Alan.
Oh yeah,
Chadda don't pay retail. Let's go.
Yeah, totally. And I got another golf buddy, Darcy Bristol. He his favorite line is FOC, free of charge, right? So,
Right.
So I think there's a lot of joy out of that. And it's everywhere. I mean, if you go open the fridge, everything that you see that my wife buys from the local Loblaws here in Moore Park has got the
sticker on it.
50% sticker.
50% out, yeah.
In fact, I made a joke the other day. Somebody was over, and it's like that my wife's staff has the official Weston family tape gun. So she just goes in and hits whatever at Loblaws.
That's
I don't
hilarious.
want a lawsuit from Loblaws, but
That's hilarious.
So yeah, that's on the thrifty side. So I think it's more like just value, right? Like, and I think there's.
Were you always this cheap?
Yeah, well, exactly. Well, that's the thing. When people say, are you cheap? I go, thank you for noticing.
Thank you.
Yeah. So, I don't know. I don't think so. I think it's people have their spots, right? Like there's certain things that, I'll spend on that people will say, well, that doesn't make any sense. You'll park a kilometer away from the next meeting and walk and risk being late to save a parking charge. But then you pick up a $60 bottle of wine for a Tuesday night dinner. And I'm like, I kind of felt like it. So everyone has their own sort of spots. Yeah.
So, all right. So now you get this raise from your boss, 20K, groundbreaking.
Yes.
And now you are starting to build CDNX.
We're all starting. There's a bunch of us, but we're working on across the country, trying to, and into the United States to show them how to, for earlier stage companies, that there is a way to use public markets to advance your business plans and execute on your dreams.
So it sounds like you were doing a little bit more sales than you were doing accounting.
Yeah, the entire career at the exchange did not look at accounting much. Where it came in was, I shouldn't say the first kind of 10 years, let's say.
Yeah. That's a dog barking, by the way.
Yeah.
You remember that dog earlier?
Yeah.
Yeah, Rumi? Okay.
Yeah.
There you go.
Staring out the window at people walking by. So the first 10 years, yes, heavily on the quality control side. So the whole listings group either reported to me or that's where I worked for the first 10 years. And in that instance, yes, our staff, my staff at the time, we need to know how to look at a prospectus, how to examine financial statements, how to get into it. So there was a lot there, but what the real love of the role was making things happen. And that's when we rebranded it from listings to capital formation. That was the fun part, because you're like, okay, entrepreneur, business idea, strategy, capital, right?
Yeah.
If we could do those two things and do it well on a mass basis, while protecting the investor from, hygiene issues, making sure that the people that were involved were vetted and checked out.
Hygiene issues?
Hygiene issues, I'm using it too much as a blanket term, meaning we don't want people who are known sort of fraudsters or criminal track records or anything like that. So that these folks are appropriate fiduciaries of investors' money.
Yeah.
So we always said at the junior market, we try and take we use hygiene risk, but we try to take the fraud risk or the, sort of the management risk. That's not really fair. Out of it, leave you with the business risk. We want investors to either make money, ideally, but if they lose money, we don't want to have it because we didn't do some of our basic checks that we need to do. We're never stamping. We never did stamp something as investor proof or investment grade.
Yeah.
It's always caveat emptor. But within that, we always want to differentiate ourselves from other junior markets around the world where they'll just list anything, right? And you don't know what's really behind it. So
what's like an example of a junior market today?
Well, the TSX Venture Exchange would be one junior capital market. The other would be the Canadian Securities Exchange, the CSE. And then in the States, you've got what's called the OTC markets. And then in London, you'd have the AIM market, which is the alternative investment market. And in Europe, there's a bunch more.
Yeah. So for TSX, you have to be a public company. For all of these other ventures, do you need to be a public company as well?
Most of them, yes. There are some hybrid markets that are out there right now. We took a shot at something called TSX Private Markets 7-8 years ago. We had some success at the time. You know that company Flow Water, the square kind of water containers. They traded on that platform and raised some money before they were public. I believe they went public subsequently. So they're hybrid models, but most of my career was involved with companies that became reporting issuers or public companies so that they report to either the OSC or the Alberta Exchange or Alberta Commission. So mostly public, but there is a whole nother tier there of companies that don't want to be forced to go public too early, but still obviously are in capital raising mode.
Yeah.
And so then you were mentioning the CVCA, that's another group, Canadian Venture Capital Association. And so they spend a lot more time, I think, I haven't looked at it recently, but in the private world.
Yeah.
So there's always that sort of competition.
Wow.
And we never in my career was it ever a hard sell. Like we never want to tell a client that you should go public at all costs. We more sell think before you jump in, do your homework. There are great upsides to being public, and it's the greatest wealth creation machine in mankind's history. Like nothing is created more than a stock exchange.
Okay.
Right. That the concept of public companies and the multiplier you get in terms of each earning per share or cash flow per share, that if you're a private company versus you're a listed company, there's nothing in the planet that's ever created that kind of value. I'm not a crypto expert. Maybe crypto's now for some people creating that kind of value, but we tell them, listen, tread lightly, because for every story about, the $1 billion company that, was small, there's companies that don't raise enough capital, the business plan didn't work out, and then they're sitting there on a public exchange paying fees and lawyers and securities fees without the benefit. So if you have all the costs, of the membership, but you can't even get to the gym, then cancel the membership.
And how much does a gym membership cost in this case?
The good thing about Canada is it's pretty tiered to the size.
Okay.
So the smaller the company, the less you'll pay for a listing fee.
And would you find those tiers are pretty reflective and parallel of the multipliers that you get at different income levels?
Well, that's a good question. No, it actually can work. It can work the other way too, because the risk reward model is that, the reward for, let's say, a junior mining stock that's in a very promising region of geology, and it's very small right now, 10, 20 million market cap, that might trade and that's not the best example because that doesn't have earnings, but it might trade at an even greater multiple or at a greater valuation, I should say, just because it's more binary. Like if it goes, it's gone. Like you're going to make a 200 bagger on your stock.
So it's either home run, it's hit or miss.
Yeah.
Like it's either home run or a strikeout.
Yeah. And then if you go to the top of the New York Stock Exchange stock list or Toronto Stock Exchange stock list, you get more stable dividend paying companies and, you know, their multiple may be a little bit more stayed and they're not trading because no one's going to become an overnight millionaire on that. But it might be a great thing to put in your kid's RESP because over 30 years, it's just going to chug, chug, chug. So it's not necessarily a direct correlation.
Yeah.
Your question? Yeah.
Okay. Good to know. Now, actually, I'll save this kind of investing question for later. But for now, talk to me about getting to that first 100K a month mark. Actually, no, not yet.
Okay.
Talk to me about building CDNX.
Okay, excellent.
Because this is a really interesting chapter, I think, especially because you jumped in, but we're at the time of like a merger.
Yeah.
Now, were you brought in to finish the merger and bring that over the finish line? Were you part of the strategy team that decided, hey, we should do this and, you know, position things as capital formation and merge all these smaller ventures? Like, at what point did you get in? Like, talk to me about where it was when you started and then how that kind of grew. I'm really curious.
Yeah, I was, I wouldn't say too junior, but I was junior at the time when the big sort of mergers started happening. So this would have been 1999. And then, you know, fast forward 4 or 5 years, a lot of stuff happened. The landscape in Canada just all of a sudden consolidated.
Yeah.
And so I was not in, I was a couple of steps removed from being anywhere near the decision making around that. So I was very much involved in the soldierly execution and implementation of it.
Okay.
Which was a fascinating time, and one of the fun things was getting to see the country, because I had, other than being really, really little and going camping with my parents in BC and Alberta, couldn't remember. But when you're putting together a pan-Canadian consolidation of all these 5 previously separate junior exchanges, you know, you get to go to, you know, all through Alberta. You go to the mountain country, go to BC.
Magic, baby.
Yeah, you get that. Winnipeg, Quebec, Montreal, and not only that, when you're trying to, because these creatures, these businesses, or these, they're now businesses, formerly organizations. Each government, whether it's a provincial government or a federal government, they're all very proud of their stock exchange. Like, stock exchange has a national pride invoking sort of feeling. That's why international mergers have not been that many or that successful.
We tried international merger. You mean like TSX and NASDAQ, for example?
Example. Yeah, that's another one. Very hard to get the home country, or the country that's going to be the controlling sort of entity. The one that's going to become controlled by the other country,
to swallow that pride and be like, yeah, we're Toronto now.
Right. and I think that, you know, the TMX group had a proposed merger. My dates are terrible. I'm terrible with the calendar, but somewhere around 2011, to merge with the London Stock Exchange group.
Okay.
And we had put forward the idea that we would have a company called LTMX, London, Toronto, Montreal Exchange. No one would ever agree that that was the actual expansion of the acronym, but that's what the deal was. And it took a bunch of years, but at the end, it didn't go.
Wow.
And I wouldn't say that one was particularly because of political.
Yeah.
But there's always a massive amount of political. The fear being that if you take a country or a province's capital formation machine and their stock market, well, what goes next? The head offices of companies, and it's a bit of it's actually a bit of an antiquated theory, I think, in today's digital age, because it doesn't really much matter where things trade. They trade on your phone. You know, but there still is that pride and pull to it.
I don't think it necessarily matters to the end user perspective, but I think for the decision makers and the people in power, you know, the politicians, the people who actually want to grow their economies and GDPs, like, I think that's going to matter. But it's getting really interesting as we see the rise of the internet and the erosion of borders.
Yes.
And I'm not just talking the Canada-US drama.
Yeah.
I've kind of had this thesis where like one day something bad is going to happen. There's going to be some form of revolution and we're just going to be one world. And I think the internet has kind of like advanced that and really made that possible. But now as a result of being able to see what the lives of people are living, we're not necessarily like we can literally go on our social media and tap a different place in the world and see what users on the ground level are actually recording on their phones. And it's crazy to think that. But I feel like in as you look over history, there was like, I studied this paper, it was called Imagined Communities. And it was the concept of why would a Toronto Maple Leafs fan and an Ottawa Senators fan fight when they're in the audience, right? For example, like you're wearing a Toronto jersey, I'm wearing an Ottawa jersey. Dude, we're enemies.
Yeah.
But now all of a sudden we're wearing a Canada jersey versus a US jersey, we're on the same side. What's the difference? You know, why does somebody who follows the show feel like they're a part and going along your journey, whereas somebody who's never even heard of the show is all of a sudden like, what are you guys talking about? Right? It's almost like being on the inside of it. It's almost like being on the inside versus the outside of an inside joke. If that makes sense. You've been on the outside of an inside joke. It friggin' sucks.
Yes.
What's the difference? The difference is the communications that, you know, whoever the organizer is ends up sending to its constituents and to its members. So for example, us being Canadian, we get certain messages from the Canadian government. People in, let's say, Morocco are getting completely different messages from the Moroccan government, right? So all the people in Morocco feel like they're a part of something. All the people in Canada feel like they're a part of something. If you're like an Arsenal or a Liverpool fan, you're going to have something similar.
Yeah.
Right. And it's this whole concept of the communications that people receive over time will have them feeling as if they're part of a community. That's what makes someone feel like an insider, and will have someone in the stands fighting the person that lives across the street from them. It will have people during COVID saying, you're not in my bubble. Yeah. Right. And ready to fight if you're anti-vax or unvax or on Trudeau's side or Trump's side or whatever. It all comes down to the communications. And I think that's been really interesting. And what's going to happen in the future, who knows? But I think when you think about that, the London, Toronto, Montreal, everybody's received communications in the past. So they're like, no, I'm a part of Toronto. I rep Toronto, right? Same way that you're rocking that 51st. Everyone all of a sudden wants to be a part of it because they're getting those messages and they feel like an insider. Right. So it's been a fascinating concept for me, and I've always been curious about it. And it seems like that's what was playing out in the past for you.
Yeah. Well, the book's called Imagined Societies?
Imagined Communities. And it's not a book. It was just an essay written by this guy a long time ago. Okay. But I took a history course in fourth year uni, and instead of just studying the same history that people always study, it's like let's take the lessons from history and apply them going forward, and what do you think is going to happen in the future based on history and based on what's happening today? Really cool course.
Yeah, it does sound very interesting.
Interesting, right?
Yeah, totally.
Yeah. And that was just like, that was literally probably one of the most impactful parts of university. Like you go through all this stuff I remember there was this old white guy named William Thurber. That's my dog. Shout out Thurber.
Oh.
And first year course, he says, I'm going to teach you the most impactful thing that you're going to learn in your whole university career. All right, who wants to be an example? And everyone's scared to raise their hand. Someone raises their hand, they go up. They say, see this paper right here? Here's how you fold it and put it in an envelope. Okay? And then he said, look at me in my eyes, stick out your hand. This is how you give a handshake. Okay? And he's like, these are going to be the most important lessons that you learn all university. And the last one, smile and be charming. And next thing you know, you'll have no more problems. And I didn't understand. I'm like, this guy's full of it. You know what I mean? But like, here I am, it hurts to say, almost 10 years out of university. And it's like, those were the most impactful lessons, dude. The things that did not matter. IFRS 15, don't care about it. Yeah. Don't care about revenue recognition. Don't care about amortization. Don't care about none of that. Well, that stuff is important. Don't get it twisted. Yeah. But these were very impactful. And I'm curious what, over time, people will find as the most impactful lesson from this episode was. But the one that I'm really curious about is, how did you guys grow CDNX? Right? Like, what was the tool? It's a marketplace app at the end of the day. You have investors and you have, people who are listing. You have one side that wants something and then another side that wants them. You're bringing them all together. Yeah. What did growth look like?
Well, spending 20 plus years at the exchange, it's always a tough thing to do. Like, are stocks bought or sold? Do you bring pools of capital in, or do you try and bring more interesting listings and attract more listings, and that will drive more capital? So there's a lot of chicken and egg there, stuff
Yeah.
that works. Looking back historically, I think there's a few things that go into it, and one of it is it's hard to grow. It's hard to grow, you know, in the short term. So I think that's one of the reasons why the acquisitions were done, right? Because we could scale very quickly.
Yeah.
But then after that, trying to organically grow it, we put a lot of effort and energy and enjoyment and pride into a lot of missionary work. So we went out there and went to the US, we went to Israel, we went to Latin America, we were in China, we had an office in China. So globally, I was in South Africa. So all over the world, we would go and explain our Canadian advantage. It's not just ice hockey. It is also what we called a two-tiered model. We have a CDNX, or a TSX Venture Exchange as it's known today. And then that intake ramp for junior companies is a stepping stone to the big market, which is TSX, and interlisting with NASDAQ, NYSE. And so it sort of like gave people in parts of the world, on-ramp that maybe didn't have that. And there's the best compliment is someone copying you. And so in the years after 2000, 2001, when we put this together, the CDNX, and really started investing in it and marketing and branding, and making sure our rules across the country were applied consistently, there were copycats everywhere. So Japanese market, they opened up their sort of junior market. Cool. Chinese tried to do it as well. London Stock Exchange opened the AIM market. So there was a lot of folks, and no one, I don't think, has really been able to replicate what we have. And then the other piece was just the economy and markets. And Canada is fortunate to have a lot of resources, and hence our markets have always been heavily weighted towards natural resources. So, you know, when you have precious metals, base metals, forestry, oil and gas, heavy oil sands, and, you know, things like that, if you go through a commodity super cycle, which we have previously been through many, then that really puts our market really in the forefront globally. I think you're starting to see that again these days, with gold being where it is today. So yeah, it's a bunch of different things that go into it. You know, and the challenge also is that, you know, junior markets, you got higher risk listings, and then when you're in a risk off, as they call it, or bear market environment, you know, they're the first to get sold, right? Like, people will look at and say, oh, well, now's not the time to go into that. At least the general retail public. So
what's a commodity super cycle?
Well, that would be where you have a long stretch of, you know, copper, nickel, a lot of base metals that are, a lot of times it happens during wartime, when you've got wars going on, because there's a lot of requirement for metals when it comes to war. It can also be just where you know, economies going into they see an expansion phase coming. One country is building, like when China was really building like massive amounts of new cities and everything else, that drove up the prices of all these input materials. And so as they start to move, then you typically also get precious metals like gold and silver and others sort of move with it. So the term, I guess, is because some of these cycles or bull markets in mining stocks often are multi-year, like 3, 4, 5, 8 years, because everything takes quite a long time if you're spooling up a new mine to get it going, to get it permitted, to get it built, to get all the things to it. I think that term just came up over the years, super cycle.
Got it. Okay. Yeah, I just wanted to get on the same page.
Yeah.
Oftentimes when you're in an industry so long, you just use these terms that are
shop talk. My bad.
Exactly. But you're catching us up to speed.
There you
go. I appreciate it. Now, when you guys started this CDNX, what type of revenue was it making? Was it even making revenue? This was a brand new merger, right?
No, the business, the stock exchange business has always been profitable. I've never seen any of our entities, maybe obviously some startup things we've done, but other than that, it's always been cash flow positive, very good margins, very healthy. So, I would almost say we might have been even as small as sort of a $20 million business at the time. And I think that this is just the junior market. And I think it's broken out and disclosed separately. I can't actually remember, but we're talking about having quadrupled that, if not more, in good years. But it ebbs and flows just like the market, right?
Yeah.
The other thing about that number is that number would be, from my history and vantage point, would have been just sort of the listings revenue. Then you would add on trading and data. So it's probably going to be 3 times that number.
Yeah.
But the number that I was heavily focused on was the listings, because I dealt with the corporations. Those were my clients, and all the related groups like bankers and lawyers and stuff like that. So everybody on that side would be folks that I know today. That's my social network and everything else.
Now, was it your social network before this, or
no?
Is this how you grew it?
Yeah, this is the other thing about the role that was excellent over the 21 years I was there was because it was front facing from 2 perspectives: one, to customers, and to those advisors of the customers, their lawyers, their bankers, etc. And to the media, things like this, and to the securities commissions. You become sort of a known quantity, and you interact a lot with people. So
you're an influencer, is what you're saying.
Oh, I don't know about that. I'll have to look up that term on Instapedia.
You're gonna have to show a little more skin if you want to do that.
Yeah, there you go. Maybe next lifetime. But that's been huge, right? Because I enjoyed every minute of it. I think I treated everybody really fair, even when you had to give the answers people weren't looking to hear.
Yeah.
But that was really became the network, right? And it's all about reputation and how you treat people.
Yeah. Now, when you first took this job, I mean, you mentioned, I figured this is going to be like a mini MBA.
Yes.
Right. It also seemed like a social club. Right. It also seemed like it's a place that you grew your network, and got connections. That lasted a lifetime.
Yes.
Talk to me about when you're first starting your career. What's more important? Money, connections, knowledge. Like, you have this money people deal, right? You got this.
Yeah.
What's most important? Would you ever take a job just for money? Would you ever take something that isn't going to teach you something? Talk to me about job strategy when you're first starting out your career.
Yeah. I mean, my thought at the early stage in a career, the focus, if you can be non-myopic about it, is non-myopic, meaning myopic would be you can only see like this far in front of your face. Okay. Non-myopic is, I can actually see not around the corner, but at least up the road.
Got it.
Sorry.
It's okay.
I tend to talk in riddles sometimes.
That's
Sorry.
all right. Riddler. There we go.
So, I think, knowledge acquisition at that stage is really what's key.
Okay.
I think networking is just, you can never learn it too early.
Yeah.
Even before your career starts. So I think the social skills and the ability to interact with people, make it interesting, be yourself, like you said earlier, be charming or whatever it may be.
Smile and be charming, yeah.
Yeah, learning how to smile, learning how to deal with tough situations, awkward situations. So I think those two go hand in hand, and it sounds a bit trite, but the money will follow. So I do believe that the money will follow. I think, then you get into saying, follow your passion and all. I'm not going to go that far, but I think focusing on those two and the third will come is right. I do think that there is a time where you will have what I'd call opportunistic moments to just crush it and financially. And sometimes I've even felt sometimes a bit guilty, like, oh man, like I didn't actually do a lot of work for that situation, but I look at how lucrative it was.
Yeah.
And then you sort of at first, like, how do I reconcile that back? And then, you spend time realizing that you can't measure it just by, well, I did 3 phone calls and I did a Zoom with the guys, and all of a sudden I had $500,000 in my jeans because of this, and the stock did well, and that's how I took my consulting invoice. I took it in stock.
And was that the first $100,000 in a month for you? I'm guessing this
that
situation that you're thinking.
Well, that one is just an example I just made up, but it was 501,000. Just kidding.
Oh, okay.
But
sorry, Your Majesty.
maybe I'm kidding.
Yeah.
We'll come back to that, and maybe I can come back to that if that's okay. But the idea being that,
dude, it's your show. You can do whatever you want.
all right. Well, I'm not used to that, but thank you. Although my friends would differ.
You have friends?
Yeah, occasionally, fair weather. So I used to just sort of say, wow, that, like, you'd measure the output from the hourly input, and then you realize, no, this is a culmination of 30 years of building up not just the knowledge, but the network. And the network is tied to your brand, which is what you know, who you know, and how you conduct yourself.
Hold on. Network is tied to your brand.
Yeah.
Brand is what you know, who you know, and how you conduct yourself.
Yeah, I mean, I'm not saying that's the textbook, but those are the things that I think about.
This is Ungad's textbook.
Yeah,
you know
my textbook, which is, they go hand in hand. You're not going to have a good network if you're a dummy, right? And you don't have to be an Einstein. Be somewhere like the rest of us, somewhere in between. An average is fine, but then be really good at how you respect other people's time, returning emails, getting back to people, your say-do ratio. If you said you're going to do something, then you don't have to do it. But if you said you're going to do it, you at least owe them a communication as to, you know what, something's come up. I can't do what I promised you.
Yeah.
Those kind of basic things. When you stack 30 years of that on top of it, that's how you build a relationship or a brand. And then what happens is, sometimes you're just Johnny on the spot or Rajiv on the spot, however you want to use it in 2025. And you know what? And then that's how these things happen, right?
Yeah.
And so yeah, no, I'm happy to answer the what was the other question? When did I make $100,000 in an hour or something like that?
No, not yet. We'll say that for later. But in a month, you remember the first time you did it in a month? And the month and day might have been the same time, but I'm just curious,
Yeah. I had an advisory role. This is in my sort of post kind of retirement at least from formal full-time work.
Yeah. This is when? Which part is this?
So I left sort of the former work world in June of 2019.
Oh, so this is like post-retirement stuff.
Yeah.
Okay.
Yeah.
Well, okay, go ahead.
Yeah. I mean, inside a career, inside my career, yes, you did get to points in time where, as a senior executive, you'd get your bonus, and your bonus could be a couple $100,000, right?
Really, as a bonus in corporate?
Yeah.
So let me add a little bit of texture. So it's funny that you mentioned the say-do ratio. I recently met with a friend of mine, similar to your age. Brown guy as well.
Okay.
And he mentioned...
Thank you for noticing.
Oh, no problem. Okay. So he mentioned why he likes me. He said, I like you because you got a high say-do ratio. You say you're going to do something and you do it. And I was like, cool. I've never heard it expressed as a say-do ratio. I was always saying, like, the only thing you have is your word, right? And the stock price of your word goes up if you do what you say.
Yeah.
And it's going down if you don't. But he mentioned the same thing.
Yeah.
And I thought that was interesting.
Yeah.
He also expressed concern for my net worth. And what else he changed my perspective on is being able to get rich in a job. I never thought about that. I never even knew it was possible. Everybody that I knew that worked a job never made anything significant that was notable enough. And growing up, you're not allowed to talk about money. Don't ask people how much they make.
Yes.
It's like this taboo topic where we're not allowed to talk about it, yet everybody's impacted by it, and everybody's goal is to get rich. Meanwhile, everybody's definition of rich is different. And it's like, what do you mean we're not allowed to talk about this? Hold on.
That's how I was raised too. Yeah, rightly or wrongly, yes.
Yeah, and is it right or wrong for you? What do you think? Like, you talk to your kids about money?
I'm a bit more open about it with my kids, but mostly because I just want them armed. I want them armed, and I think information is better to have
than not have.
And I temper it with, like, I wouldn't walk in and say, hey, I got, or I would say I got super lucky. Dad got lucky in a situation here. And you know what? He was at a company and they granted him stock options. And then who knew that, this was going to happen or that was going to happen? There's still no substitute for hard work, all that kind of stuff. So I would temper it, but I'd also want them to know that how do you put yourself in a situation to be lucky? Yeah. Right? Like you gotta, because I wouldn't want them to think like, listen, it's a journeyman soldiering, head down, shut up, be seen, not heard, work.
That's all the traditional advice, right? And I was having a conversation with a friend of mine the other day. Shout out my guy Jordan. He runs a dog training business. He trains police dogs.
Oh, wow.
Wild. And he goes, the biggest lie that my parents told me was keep your head down at work, because when your head's down, the opportunity is gonna come around, kick you right in the butt, and you keep on walking, and you're gonna miss it. Yeah. And I thought that was pretty profound.
Yeah, totally. Yeah. I mean, it's no different. I mean, bad analogy. Maybe I sometimes do this, but I'll do it anyways. Try it again. Dating, right? Is if you're a young guy going out there and go, listen, I want to meet my wife, right? Well, that's not happening if you're going to places with low ratios, right? That it's just not going to happen. So if you just say, I'm just going to sit there and dream and hope and whatever and stay at home. No, you got to put yourself out there, right? Outside, okay, what's this club? Oh, Ultimate Frisbee. That's how I met my wife, Ultimate Frisbee.
Ultimate Frisbee.
Yeah.
Okay.
And I like sports anyways, but I mean, if I was more hermit, if I had hermit tendencies, I'd be pushing myself to say, get yourself out there. Don't just keep your head down at work, because nobody's going to know your name. Yeah. So it's a balance, right? I think like anything else, you need, it used to be the saying, it's who you know, not what you know. No. It's what you know and who you know. Yeah. It's supplemental, not substitutional. Ooh. And I think too many people get into this. Oh, it's either this or it's this, right? It's always more nuanced. So you put yourself out there, and so I was in one of those situations where I had a client. We had a situation that I was actually exiting, sort of my term, as a
vice president.
This was a different one. This is it was a CFO, like
you were a CFO,
a contract CFO.
When was this?
For a tech company? Yeah, that was after retirement.
Post-retirement, okay.
And
so you didn't even make 100 grand. Sorry, 100 grand in a month, as.
Oh yeah, I did. But sorry, that I guess was the story, which is just saying that
stock options.
Once you, like, I was very fortunate to be at a very highly profitable growth company, tons of cash flow, excellent margins, and very little competition.
Yeah, literally. That was what I wanted to ask. I'm like, what's it like being a CEO? No friggin' competition, man.
Yeah. So being an executive in that scenario. Now there are various parts of the business. There was competition and still is today, and it ebbs and flows. But be lying if I didn't say, like, listen, it was a very from a financial point of view, the economics of how an exchange runs, especially one that's 200 years old or 170 years old, there's some luck involved there. So when you talk about these numbers, without getting into all the specifics in what year, I mean, it is possible to make quite a lot of wealth in an employment role, in an executive role. And again, I go back mostly to what I said earlier, that the stock exchange is the greatest wealth creation machine man has ever created. I believe. Somebody maybe write in and say, no, I'm wrong. There's something else. But
it's okay. If you don't think so, leave a comment in below. And then when I see your comment, I'll message Ungad and see if he could come in and respond. I don't know if he has a YouTube account though.
No.
Or a LinkedIn account.
No.
So I'll get him to write you a letter.
Yeah. So I guess the long way of saying it is, yes, in a way, have I made $100,000 in a minute or a month or a year or whatever? Yeah, because at a certain level, there are rules where you can have years where you're 7 figures or multiple 7 figures, because it's a blend of, your base, your bonus, your the stock really has been the big, most of the wealth creation that I've experienced, other than, working for 26 years. I guess I worked for about 26, 27 years. You save money, you invest, you buy real estate. And if you're in Toronto, it's done well. So you make money that way.
Yeah.
But the biggest sort of
swings
one bucket has been all from stock and stock options in employer situations, or companies that I've now since been on the board of. So I'm on the board of how many now? 4. I think 4 public companies.
Wow.
Right now.
Why? What do they think? What do they see in you?
I don't know. But seriously, it's I think it's been a great. I mean, the opportunity I was given at TMX to do what I did and love every day of it for 21 years. Like, the alarm clock goes up and just bang, you're out of bed. Let's go. Let's rock. Right. Was amazing in and of itself. Gets you, you raise your family, you build your base, get your house, whatever you need to do. But the afterlife has been, I wouldn't say even better, but just as good. The afterlife has been just as
retirement.
Good. Yeah, well, yeah. My buddies joke with me. I like to throw around like a big tough guy. Oh, I'm retired, but they're like, retired my ass.
Dude, you get way too bored. You would get way too bored.
People say that. I still like to think I'm okay with boredom, but I haven't been showing it. So I guess, so involved with those, with other companies since that time. And I feel like it's a lot of fun. I have a lot to give back, because when you're sort of the, in a way, the small R regulator for a lot of companies in the country for a couple of decades, you tend to see a lot of shit. And learn a lot of shit. And I don't know why I'm swearing all of a sudden. And
fuck it.
And
your show, dude.
There you go. So I feel like I have a lot to give back, and it's a real thrill to go from a theoretical Ivy Tower at TMX, where you're making all these decisions that have real impact downstream on businesses and people's lives, to actually be now involved in these companies. One CEO of UIG, which is on the TSX Venture, and the other is on board.
Boom. What's the ticker?
UIG.
UIG, baby. Search it up. TSX :UIG. You'll find it there.
So it's been great.
What do you think about how's life on the other side now?
I mean, I couldn't be happier. Like, it's amazing. Some of my friends ask, and I go, I feel like when I was in my 20s, and we were, but before I moved to being an executive at TMX and being responsible for the Toronto Stock Exchange, the senior exchange. I was always in the junior market, so CDNX, TSX Venture. We changed names around. So that's 2009 in pre. So I don't know,
late 2009 to 2016, I think it was, or something like that, right?
Yeah. Well, 2016 was another. Yeah, I made another move, which was away from the stock exchanges.
Yeah. Finish the sentence.
Yeah, maybe I'll do that. So the one on the
maybe I'll finish my sentence.
Yeah, sorry. Didn't mean to be passive aggressive there.
Sorry for cutting you off.
Yeah, no worries. So in that period, which is the most joyful period I remember. Like, I loved all of it, but the part that was the really fun was the starting of the CDNX, and then going pan-Canadian, and then traveling the world, selling this junior stepping stone market to a big market. During that time, I met so many people, guys and girls, arguably mostly guys, that were like my idols. These were clients that were serial deal guys or not even entrepreneurs. They were helping raise capital. They were structuring deals, bringing companies public, finding a vehicle for them to go into to list, marketing them. They'd invest in some, they'd be an executive in some, they'd be on the board of others, and sometimes a mix, but they would have this portfolio life of 5 or 6 different things that were going on. And because I was running the exchange, I could, you see them pop up. Whoa. Well, he's in Vancouver on this, he's that, whatever. And then as you get to, and then you see what some of them have made, right? Like they've like invested, this thing was 5 cents and it's like $4, and I'm doing the math backwards. And it's like, not that it's all about money. It's like, they're up 30 million bucks. So I'm seeing this at 26 and 27. And I'm like, God, I want to be like you when I grow up. Not so much the money, but what I liked about it was the portfolio and diversity.
What about that portfolio and diversity?
Well, just this idea that you're your own, like you're not employed.
You're just playing for your own bank.
You've got your own deals that are going on. The flexibility was very exciting to me, and being able to have, like, you're living in a world where you're an employee for so long, like basically from 96 to 2020 roughly. That whole stretch, you can't moonlight.
No.
Like, I never did anything that I got paid for outside of work.
Wait, so you didn't sell feet pictures?
No, I didn't do that. And I did tax returns for a few people, but I never charged them. So being able to see somebody saying, wow, I've got this and this and this and this. And to me, I guess I just like people would say it's risky, but I viewed it as de-risking, because you got like 6 or 7 things, like just like a portfolio. If one stock, shits the bed, you still got these other 4 or 5. So, and then I used to like other things about, like, things that as a young person you'd look at and go, like this one client, wasn't even a client, because he would be like a promoter or deal. He or she would be a person who's on a bunch of boards. It might not be the CEO of the actual company that's paying my invoice or our invoice, but he's a connector. He's an influencer, right? And so it would be, all right, well, listen, and that's where not keeping your head down at work, but continuing to network and socialize. I was the kind of guy that, I would do the work, but if someone would say, oh, can you meet? And I go, oh, I'm fucking jammed with meetings. Like, I'm just in town from Calgary for, I've only got tonight. And it's like, what are you doing? And I'm like, and then the guy goes, well, what are you doing? How about 6 o'clock or whatever for a beer? And I go, well, yeah, I got my trainer. And then, okay. But a lot of people wouldn't even think of doing that. Like, you're not even a listed company. You're behind the scenes and you're putting deals together. And I work at the exchange and I'm going to meet you. But I'm like, yeah, let's grab a beer. So you grab a beer, it turns into a dinner. You end up getting home at 10:30, 11 o'clock. Your wife's pissed at you, but you've like, that's just, who knows? Nothing could ever happen.
Yeah.
Or and I found that over the course of time now, having spent 20 plus years, I get texts and phone calls from all over the globe.
Yeah.
Because all it took was a little time, and I was genuinely interested in what they were up to. Yeah. So anyways, I used to look at these folks and say, that's awesome. Another one was, if anybody wants to meet with me, they know where to find me. And I'm like, well, where do they find you? Oh, well, I'm at Il Fornello Tuesdays and Wednesdays from 11 to 2. So anybody who needs to, and this is a big hitter. Anybody who needs, and you go, where do you live? Well, I live in Barrie. Oh, Barrie. And he goes, yeah. He goes, like, I come down my 911 convertible. I don't do traffic. I don't do rush hour. So, and I only do 2 days a week. So if anybody wants to meet with Dave, they know where to find me.
Shout out Dave.
Tuesday, Wednesday, I hold court at one of those restaurants. Wow. Maybe it was 10 to 2 or 11 to 2. Yeah. But that's it. And I'm just like, and you know what? I'm running all my deals from wherever I am. So I think as a young guy, I was always like, oh, I want to be you when you grow up. So now I guess
it's a lifestyle, like that type of style. Like how do you move like that? Okay.
Yeah. And it's it's so much less of punching a clock or measuring what you do in hours and more about is the puck in the net or not.
Yes.
And so I think at this stage of life coming around later now in my late 40s and now early 50s,
Yeah.
I'm loving it because in some sort of way, maybe not all the same ways, I'm living that life that I used to look at in my 20s and late 20s.
Yeah.
Because I'm like that guy now, right?
Yep.
Now, it doesn't mean everything I touch works out well and I can still fuck stuff up
Yeah.
as much as the next guy.
Yeah.
But that's what I'm enjoying. My goal from now on is I never want to be an employee ever again. Not that there's anything wrong with that.
Yeah.
But
it was interesting. After I got my first place and, you know, started investing a little bit more, I was talking to my girlfriend and I was like, you know, life gets different when you're playing for your portfolio instead of playing for next month's rent. You know, like all of a sudden the landscape changes completely and you start looking at things different. And it's like, yeah, I don't need to work here. I don't want to do this. I just get to do stuff that I want. I'm hanging out. What day is it today? I don't know.
Yeah.
What time is it? I don't know.
That's another great thing.
Dude, we're here. Like, that's all that I know. It's like, yeah, we could talk as long as you want to talk. Like, we're hanging. As long as the audience is hanging, we're hanging. I'm having a great time.
Go for another walk. But
Yeah, we're
she's
good. Maybe we'll make that like the excerpt of the exercise. We'll go on a little walk, you know, a little stroll in the park.
Yeah.
So what's it like now being on the other side? You know, you're playing for a portfolio, you're playing for your own deals. You're just trying to put the puck in the net on the UIG side. And it's really interesting that you mentioned that because it sounds like that was one of the lessons that came from that coach at EY, because you said it's not about just doing the test. It's about just scoring. You know?
Yeah.
And so right now, what do some points look like? You know, when we get some points on the board, UIG, what's that like?
Yeah, like for us at UIG, it's all about scale and growth.
Okay.
And you know, we've had a really tough low-rise resident. So our customers are the big developers. So the Dell Parks, the Green Parks, the Madamies, those types of companies. Those types of companies.
Okay.
Yeah, TAC is more like what we do, but I was describing our customers. So you
like
draw,
Tribute, for example, or like what's it like Madamy? Or
big home builders. So today we're out in Joshua Creek, Oakville. We're also in Pickering. Our crews are out there.
North side Pickering, right?
Yeah. So we got that. So this year has been really tough because the combination of the rate cycle, all the cuts that were coming. A lot of people took a hands-off approach to say, listen, if I'm going to get a mortgage, let's see how far this is going to fall.
Yeah,
and then secondly,
how low can you go?
Yeah, how low can you go? And then also on top of that, it's now with the Trump tariffs and things like that, it's a tough year. But if you pause on that, we're making our way through it. We've built a super exciting pipeline going forward of awarded contracts. And we know it's a question of, and I won't soapbox this too long, but I'm passionate about it, there's a housing crisis, there's an affordability crisis, and we're way behind, particularly Ontario, in getting shovels in the ground. And I think with the provincial now and now federal election most likely going to come again, this is going to be a huge platform. Yeah. And, the tariffs will get sorted out one way or another. So we're very bullish. Our issue is right now just the timing, right? The timing, because we have a crew of 30, we're unionized. It's not super capital intensive, but what is puck in the net is getting the deals closed, right? Okay. So getting out there, making sure we have the pipeline, executing, connecting all those dots. So that's an example for UIG. And the other big thing,
we're about to have a celebrity join us.
Oh, okay, awesome.
Yeah.
And the UIG is, M&A is another really big piece of it, right? Okay. So anyways, that's our journey. We're early in our stage of getting it. I may not have told the kids that. Hi, Steph, come on in.
No, you are the celebrity that we've been waiting for.
Yeah, come on in.
All right, so Ungad's wife just walked in, so we're just going to give her a moment to walk into the door, get situated, et cetera, et cetera. Thanks for being so gracious, audience. We appreciate you guys.
Thank you.
Yeah, no, it's okay. But we'll just continue the conversation.
Yeah, totally.
You know what I mean? We're real people, and there's real people, and we're at a real house, and there's a real dog running around.
There's a real dog.
So, there's going to be a little bit of ambient noise, but whatever. We deal with it and we roll accordingly.
Yeah, and if they don't like it, they can piss off.
Swipe away if you don't, but don't swipe away. I actually want you to subscribe and like and share with your friends, and actually drop a comment in the question, or drop a question in the comments if you do have something that you want to ask Ungad. Maybe there's something that I forgot, but maybe we'll be able to continue the discussion there. All right, Rumi. You're being selfish, Rumi. All right. And yeah, okay, sweet. Yeah. Now, how are you I want to know about building UIG. Okay, because first of all, at what stage did you get involved?
Yeah.
Because you mentioned that they were husband and wife, partner founder, and they started the company years ago.
Yes.
But you retired from TMX in 16.
19.
19.
Yeah.
Sorry about that.
No problem.
And then that you started but joined UIG shortly after.
Yeah. So it's Gary Alves and Christina Alves. So lovely couple. And Gary's had been in construction his entire life. Born and raised in Toronto, Portuguese background. So shout out to all the pork chops out there.
There you go.
And
I have to go for some churrascaria after this.
Yeah, good point. Yeah, the food's amazing. I put on so much weight since I met Gary. But so Gary, I was introduced. I'm trying to think what year this would have been. I'm drawing a bit of a blank. I would say about 23, early 23.
2023.
Yeah, 2023.
Oh, wow, okay.
Yeah, so fairly recently.
Yeah, you guys are new friends.
Yeah, so we got introduced through again my network, which was a securities lawyer, Bay Street securities lawyer, also Portuguese. Made the introduction to Gary, and Gary's vision, which is disclosed in our prospectus, is really looking at all these amazing owner managed or family owned construction or specialty contracting businesses. Like ours, we do what's called concrete and drain. Okay. So basement slabs and all the drain works underneath it, your porches, your garages, and all that kind of stuff. Yeah, that's what we do. So Gary grew up in that, and the vision really that Gary shared with me when we first had lunch at Chops by the airport. Excellent steak bites, by the way, there, for a little plug for Chops. And
Chops.
They have, so the idea was, listen, I got all these businesses. I'm on these committees. I'm on union committees. I'm on the Concrete and Drain Association. These excellent cash flow positive companies, when I talk to the owners, first of all, they're all 70. Nothing wrong with being 70. We'll all be there someday. But they don't, when I ask them, well, what's their plan? They don't have succession plans. They don't have exit plans. They don't have, they're exceedingly smart at what they do, but they're very sort of not familiar with finance. So when they got here, and most of them are immigrants to the country in the 70s and 80s, and they've built their business bootstrapping and by cash. And these businesses, some of them are 20, 30, 40 million revenue with long-standing contracts, and they've been doing it year in and year out. And guess what? The kids want to work for Google or TMX or whatever else. So really the opportunity is ripe to look to roll up and scale and bring some of these businesses together. So that's really why we took the stock listing with UIG, because we could use the currency to raise money and to retain our staff and to go do acquisitions.
So you were part of, you helped Gary go public.
Yeah.
Gary and Christina, right?
Gary and Christina.
Gary
yes.
and Christina. So you helped them go public?
Yeah. So in the process of getting them ready, so that took about a year to get, you got to go in, you got to look at internal controls, you got to convert it to, like you said earlier, IFRS 15, 16. There's a lot of them you got to do.
They're like international financial reporting standards. So pretty much just like these laws that say, okay, you can only call this revenue, you can't call this revenue. That right there, not your money. That is.
Well done.
All right.
Well done.
In English, by the way.
Yeah, very good. Plain English speak. So spend a year getting them ready, getting a board put in place, getting a vehicle. We used a capital pool company.
What does that mean? You guys just like bought a SPAC or something like that?
Yeah. So basically,
SPAC is special purpose acquisition company? Corporation.
Yeah. Very good. So that's a US model, which has been brought to Canada, but we have a Canadian one that's incredibly well known now. The program started in Alberta in 1987. And it's called the Capital Pool Company Program. So it's like a mini SPAC.
Okay.
And it's there's been thousands of companies that have gone public using that method versus an IPO, and maybe it's another podcast to talk about all the details there.
Okay.
But we arranged to do a transaction with that vehicle to basically, buy our listing.
Yeah.
So that whole process, along with that, we raised some capital from outside investors.
And that's pre-public.
That part is simultaneously. So
Okay.
we had our Urban Utilities, which is the operating company beneath Urban Infrastructure Group. So Urban Infrastructure Group is now public.
Okay.
Ticker symbol UIG. Our operating subsidiary is Urban Utilities. That's the baby that Gary and Christina created.
Okay.
And that business, so if you go back a little over a year ago, it was just that business, the OpCo, operating company.
Yeah.
And so we actually found a public company, which was a CPC, and we did a marriage with that.
CBC, Canadian Private Corporation.
Well, it's actually a capital pool company, the one I mentioned that started in Alberta in 87. And so we changed the name. That company was called Deal Pro. So that was just a name that 4 or 5 guys who are in the business that I happen to know as well from my travels. We actually did the merger with that and then renamed Deal Pro Urban Infrastructure Group. And the idea is that we didn't want Urban Utilities as just one sleeve of what we plan to do. Urban Infrastructure Group connotes a much broader opportunity in our universe. And as we execute through M&A and organic, we will build it out. It's kind of like what GFL did with their TSX listing. Patrick went and started buying companies and scaling it up. So we want to do something similar. So that's how I got into UIG. And then as we went public, Gary asked me to would I be the company's first CEO to get it out and get it public? And I've said, sure. So that's what we've done.
So you popped the question and you said yes.
Yes, there you go. Exactly.
So cute.
Exactly.
Yeah.
Exactly. So that's my primary, most of my time's on UIG, but I have a number of other board seats and other things.
Just like the guys that you mentioned that you look up to.
Trying to be the guy.
So now you are talking about the stock market unlocks the most amount of wealth in human history.
I think.
In your opinion.
Yeah.
You know what I mean? Let's not get too into the weeds about it.
Yeah.
It's your show.
Yeah.
So it's your rule. Okay.
Yeah.
So let's assume that Ungad is correct and the stock market has unlocked the most amount of wealth for people, humans, period. Now, what are like the multiplier tiers? So you mentioned at different revenue levels or different EPS, earnings per share, the multiplier changes. How are you guys looking at building wealth through this new vehicle of UIG?
Yeah. So first of all, a lot of art and a lot of science goes into how you attract a greater valuation, right? So part of it is the trailing results or the results that you actually post. So if you look at I call it prospectus, it really was a filing statement. We have, like a lot of people will show you on a business plan, a projection of a hockey stick of growth. Well, we actually we already did the hockey stick. So when you look at what Gary and Christina were able to do in 20, 21, 22, 23, they took the business from 5 million to 12.5 million in revenue and throwing off, cash flow in the 2 million plus. So right away we went out there saying like, this is what this baby is capable of doing. And as we stack more on top of it, similar businesses and growth, you can expect that the future is very bright. So that would allowed us to go out and raise a couple $1 million, a little bit less than that, on our initial debut. So trailing results are really important, right?
Yeah.
And then comes into your say-do ratio on the future side, right?
Okay.
So, you've got to sort of back that up with, okay, like now we're going to steady Eddie be able to continue on that growth channel. So that goes into, it's also how well you communicate, like how well you communicate to investors and prospective investors in a plain English way as to why should they give you $1, and you better have a very simple and well understood and consumable answer as to how you're going to turn that $1 into $3.
Well, how are you going to turn my $1 into $3?
Well, in
With
that
stock ticker UIG.
Yeah. You're a poet and you didn't even know it.
Jeez.
So
Bars.
yeah. So you have to communicate. So communicating, because stocks don't just, I mean, there are some stocks that are super liquid, and then you put out the results, there's going to be a reaction. Like if Google blows away analyst expectations, it's going to take off. But for the most part, especially in the junior space, stocks are sold, not bought. You got to get out there and you got to get in front of the right kind of investors, the right kind of analysts, the right kind of blog writers, the right kind of social media, the right kind of, Google impressions, whatever, Google ads, whatever it is. You got to get out there because you're not, even though you're public, you're not omnipresent. It's not like everybody can see you.
Yeah.
There's 3,000 other public companies in Canada alone, or I forget the number now, but even 3 times that in the US. So a lot of that has to go in. So you need to execute. You got to have good numbers. Your say-do ratio needs to be high, and you need to communicate well. Like those are kind of the 3 things that I think of. There's more, but those that I really think of.
What's really interesting?
Yeah,
is when you're talking about it now. These are the pretty close to the exact same skills that you mentioned earlier that you learned at UI.
Are they?
Yeah. And the same things that you were talking about, you would advise your son to do. It's not so much, focus on X, Y, or Z, but these core skills are going to, be the vehicle that carry you on the journey, right?
Yeah. And for UIG right now, we, again, like this 2024 has been super difficult. So as a result, our valuation's down, like much of the market, and particularly the market that's focused on low-rise construction. So now what matters the most is how well do we bounce back as the TSN turning point, better than our peers, better than the competition, better than the next investment opportunity.
Yeah.
So that's what we're working on now. So we've posted 2 quarters of revenue growth quarter over quarter. So it's like, okay, now we're interest rates are down lower now. And so our pipeline is bigger than ever. So, we still fight with things like Trump and how do first-time home buyers, young couples feel today? Are they going to take a, $750,000 mortgage tomorrow? Or is their job somehow, are they concerned?
Yeah.
So there's all these factors, but it started with what is putting the puck in the net look like. And it's nuanced, but right now it's like all about that turnaround and just getting it back.
Yeah.
And we feel the valuation will come. We're also very, and I'll shut up because I'll wax on forever about this, but
it's okay.
But
your show.
We are very closely held, even though we're a public company.
Yeah.
Between myself, the founders, and several other supporting shareholders, we have a lot of the stock privately held, and a lot of it, in fact, is escrowed, so it's locked up. I can't sell it if I wanted to.
Yeah.
Until certain time and milestones elapse. So we don't get too worried about where the share price is on any given day, but we're pretty confident that because we're all in terms of our big position, so we know houses will be built around the GTA. There's no question. It's just a question of when.
Yeah.
So that's really.
And all these new houses, looks like they're going to need basements.
Well, yes.
And drains.
Drains and porches and garages and sills.
All the things, man. They're going to need some urban infrastructure. And you heard it here first from the now CEO of the Urban Infrastructure Group. So we can't actually find you on social media because your social media list, I mean, like you have a LinkedIn with like no posts.
Yes, I need some help there.
Yeah, that's all right. We'll see if we could take care of it. But you'll have some posts to drop now after this episode.
Thank you.
So where are people going to be able to find that? I guess you don't even know. Ungad Chadda on LinkedIn, UNGAD Where else can we find you?
Oh, a UIG website, so Urban Infrastructure Group. So our website there. That's sort of the best place.
Okay.
And then I guess
what's in that forward thinking prospectus? You said you could see the mission on the prospectus.
Oh, right. Yeah. So I think we have it posted to the website. If we don't, the place where just for all the viewers, if you're interested in looking at things about like you can look up any company that's listed. You can look up their stock price. Everyone knows how to do that. Okay, here's a symbol. Boom. Here's the price. Okay, great.
Yeah.
But if you actually want to find out about where they post all their laundry, the dirty and the clean laundry, it's on a website, which everybody, I believe, should learn to use, which is called CDAR. It's actually called CDAR Plus, but the URL is www.cdar, which is SEDAR.com.
Okay.
So CDAR is the mandatory repository for public company disclosures. So everything has to go there. So our prospectus is there, our quarterly financials are there, our management discussion and analysis is there, all our press releases are there, even though press releases we all get in different ways. So CDAR is the spot where you would find everything on any company, including UIG in Canada, that you want to know, get into the details on.
Fair. Well, thank you for sharing. And I'm looking forward to digging you up on CDAR, man, learning a little bit more. Do you think I can ask a favor?
Absolutely.
You mentioned you're on a bunch of boards.
Yes.
You also mentioned now you're the CEO. As I'm running my company, do you think you can give me kind of like a couple quick questions that I should be looking towards if you were to invest in our company, for example? Not right now, but like, can you?
Yeah, for sure. I'd be happy to do that.
Well, if you want to hear that session, we're going to drop a link in the comments below. We're going to end the show here. If you're listening on audio, you can find it in the show notes. And if you're watching on YouTube, you can find it in the comment section below. You got to sign up if you want to hear the session, because Ungad is about to dive in and let me know what I got to change in order to be a better CEO, and some tools and tips and questions that you could ask yourself too if you're ready to level up your net worth, get into a little bit more balance sheet thinking, and really take your life and world to the next level. So once again, ladies and gentlemen, thank you so much for tuning in to another, not ladies and gentlemen, thank you for watching all the way to this moment. It's been such a pleasure having this conversation, and we're really excited that you came here to join it. So thanks so much, and we'll see you in probably about 2 weeks. We got a legendary, I know this one was a legendary guest, but we got another legendary guest coming right up. Make sure you subscribe, make sure you like, make sure you comment. Whenever you do so, it increases our show profile, and that helps us get even better guests. You know, I don't think we could get a better one than Ungad though. So anyways, we'll see you in the next one. Peace.